Okay, so now let's continue consolidation of companies. The previous class we saw few basic concepts. We saw what is minority interest. We saw cost of control, which is goodwill or capital reserve. And then we saw how do we calculate minority share at the time of acquisition and at the time of balance sheet. Now today the target is from illustration 3 to 9, and if we complete the base problems for consolidation will get over, and from next class we'll start the actual consolidation. So illustration number 3. We are going to do few very good problems. I expect everyone to be alert. So X Limited acquires 70% of equity shares of Z Limited as on 31st March at a cost of 70 lakhs. The following information is available from the balance sheet of Z Limited. Okay, so now when X has acquired 70%, X has become holding? Yes. How much minority interest they are having? So our share is 70%, minority interest is 30%. And following information is available from the balance sheet of Z Limited. They have given few assets and liabilities. But one thing is missing, which is share capital. On the date of acquisition, we would like to know share capital. That is not there. That is not there. The following revaluation have been agreed upon, not included in the above figure. Property, plant and equipment up by 20%, investment down by 10%. So wherever we have adjustment, I'll put a small mark there. Property, plant and equipment, we have an adjustment. Investment, we have an adjustment. Z Limited declared and paid dividend at 20% on its equity shares as on 31st March 2000 X1. When did we acquire? End of the year. End of the year. And they have declared for the year end at 31st March 20X1. Tell me, as per AS 13, this amount should be reduced from the cost or should be credited to P&L? Very good. Reduce from the cost. Why? Because for the period when the dividend is received, I was not the owner. I got shares at the end of the year, but dividends were received for the year. So though I am receiving the dividend, it is not for the period when I was owning it. X Limited purchased the share of Z Limited at 20 per share. What is this 20 per share? Purchase price. Think. What is this 20 per share? Acquisition cost. Very good. Purchase consideration. Purchase consideration. Now you see how many shares are they having? They have 70% number of shares. Not given. Not given. So we have to find out. We have to find out. And face value is 10. Where amount is given? Balancing here we have to calculate. It's not given. It's not given. X Limited purchased the share of Z Limited at 20 per share. Calculate the amount of goodwill or capital reserve on acquisition of shares of Z Limited. Can I begin, everyone? Yes. So illustration 3. Calculation of cost of control. Calculation of cost and control. For cost of control, we compare two things. Cost of investment. So cost of investment and very good. So holding company share at the date of acquisition. We compare these two, and then we decide whether it is goodwill or capital reserve. Very simple. So the first to calculate cost of investment, first we need to know number of shares. Number of shares, is it given? No. So that will be my first working note. Working note 1. Calculation of number of shares. So now nothing is given in the question. How do we find? We have to prepare a draft balance sheet. Or instead of direct balance sheet, can I go by net assets method? Total asset minus all the outside liabilities, shareholders fund. So calculation of number of shares. So I'll start with assets PP 120, investments 55, current assets 70, loans 15, 120. So this is the total of assets. This is the total of assets. Then 15% debentures, 90, current liabilities 50. So my net assets, oh sorry, not net asset will not be the shareholders fund. Shareholders fund will be 120. Now, are there any reserves and surplus? No. No. Where? Not included. So just wanted to clarify, this working note was not even required. Cost of investment is directly given in the problem. Everyone, consolidation, time and again I'll do wrong things. Time and again. You'll get confused what was right, what was wrong. Because that's what students they do in the exam. So why are you required to know how many number of shares? What they acquired 70%? Everyone. They acquired 70%. They gave 70 lakh cost of investment over. Everyone. Now from this cost, we have to subtract dividend. Why we are subtracting dividend? Because though we are receiving the dividend, for that period we were not the owner. We were not the owner. Now how much dividend? 20% on its equity share. So it is 2 per share. Now we need number of shares. 70 lakh divided by 20 per share. Very good. So 70 lakh. Totally I paid 70 lakh. And for one share I paid 20 rupees. So which is nothing but 3.5 lakh shares. 3.5 lakh shares everyone. And per share dividend is 2 rupees. 2 rupees. So 7. So my net cost is 63. Everyone, is this clear? This concept is derived from AS 13. AS 13. We got the net cost. Now, holding company share at the date of acquisition. The point is, bhaiya, should we take the revalued figures or should we take the book values? Revalued figures. The point is, you should read the question carefully. Revaluation is done at the time of acquisition or after acquisition. If revaluation is done before or at the time of acquisition, then I have to take revalued figures. If it is done after, then it will not come here. The following revaluations have been agreed upon. When? So agreed upon when they purchase the shares that time. So here, generally in the previous problem, we did 2 problems. We took share capital. In this problem, we will not take share capital. We will take shareholders fund in that 70%. So my working note 1 will be shareholders fund. Shareholders fund. Property, plant and equipment. How much? 120 plus 20%. 144. Then investments. 55 minus 10%. 49.5. Current assets 70. Loans 15. So I'll total the assets. Now no changes in liabilities, right? No. So 15% debentures 90. Current liability 50. So shareholders fund 138.5 shareholders fund. The entire shareholders fund belongs to holding company. True or false? False. Why? 30% is minority interest. 70% is holding company share, everyone. So Holding company share at the date of acquisition. Share capital 138.5 into 70%.
96.95.
96 point.
95.
So now here, should we take reserves or surplus or should we not take? Shareholders fund, it includes reserves and surplus. Shareholders fund is share capital, reserve and surplus plus share warrants. So reserves and surplus is already included. It is 96.95. 90. Now we are paid extra or we are paid less?
Yes.
We are paid less. Then it is
Capital.
capital reserve. 30?
3.95.
33.95. 33.59. Now, this dividend, I am not so comfortable. I'll do a separate working note itself. Working note to dividend. So, amount paid 70 lakhs. Amount per share 20. Number of shares. Number of shares is all these numbers are in lakhs. All these numbers are in lakhs. 3.5. Then dividend per share. Dividend per share 2. So total dividend it is 7. Everyone, is it clear?
Yes.
These two working notes will do. Is this problem clear for all?
Yes.
Like this, only simple problems we are going to do, but up to problem number 9. Come on, copy quickly. Huh? Only depends where whether जब dividend मिला आप owner थे या नहीं. हाँ, you'll reduce some cost. P&L. For everyone's clarification, you can write this point below. Since dividends, or I'll give you summary notes. Come on, everyone, copy quickly. Fast, 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 everyone. ठीक है, चलो. Smart. बाकी इन्वेस्टमेंट भी पूरा नहीं लिखा. पीछे क्या कर रहे हैं? ये पत्री बताएगा टाइम आएगा. Okay, so let's move on. Let's move on. Illustration number 4. A Limited acquired 70% equity shares of B Limited on 1st April, beginning of the year, at a cost of 10 lakh, when B Limited had equity share capital of 10 lakh and reserves and surplus of 80,000. In the 4 consecutive years, B Limited fared badly and suffered losses of 2.5 lakh, 4 lakh, 5 lakh, and 1 lakh 20,000 respectively. Thereafter, in 2005 and 6, B Limited experienced turnaround and registered an annual profit of 50,000. In the next 2 years, 50,000 in the next 2 years. B Limited recorded annual profits of 1 lakh and 1.5 lakh respectively. Show the minority interest, cost of control at the end of each year for the purpose of consolidation. Everyone, now let's, before I tell this, I will tell a small example so that now let's say for example, I have just qualified and I am starting a new business. I had 5 lakh savings with me. With that, I started my business. Now, first year I faced loss of 2 lakhs. Who will bear?
You.
I will bear. Second year, again 2 lakh. Who will bear?
You.
Third year, again 2 lakh loss. I had only 5 lakhs. First 2 years, I have already used 4 lakhs. 1 lakh, I will bear. Remaining 1 lakh. There's loss incurred. Loss incurred. 2 lakh. That is confirmed. Who will bear the loss is the question. Think about real life scenario, guys. I am doing business. That. So the moral of the story is minority interest can never be negative. Minority interest, they are the small shareholders, and that share can never be negative. It can come to zero. It can come to zero, but it cannot go beyond zero. Am I clear, everyone? So before we start this question, 2-3 points you'll write in the notes. Everyone, give the heading. AS21 consolidated financial statements. AS21 consolidated financial statements. Consolidated financial statements. Point number 1. I am not giving all those minority interest, goodwill, capital reserve, all those are known and very easy part. First point. First, pre-acquisition dividend will always be reduced from cost of investment. Pre-acquisition dividend will always be reduced from cost of investment. Point number 2. Post-acquisition reserve will be added to reserves and surplus of holding company. Reserves and surplus of holding company. Point number 3. Minority interest can never be less than zero. Minority interest can never be less than zero. Minority interest can never be less than zero. Everyone, can we begin the problem? Yes. So now, one strange thing which I found in the problem, uh, cost of control at the end of each year. Cost of control at the end of each year. See guys, cost of control, we compare two things, amount invested and the share of holding at the time of acquisition. These two every year will be same or different? How different? Acquisition happens one, no? You acquire same company every year. It happens only once. So cost of control will be same every year. Everyone. So we are cost of control should be same. But why they have asked each year, I don't know. So I will not calculate for each year. I'll calculate only once. That same amount will there every year. Am I clear? So illustration 4, calculation of cost of control. So cost of investment. At how much have we invested? At the cost of 10 lakhs. I don't think we have any pre-acquisition dividend. So holding company share at the date of acquisition. How much shares? How much was the share capital? 10 lakh. And I am my share is 70%. So 10 lakh into 70%, which is 7 lakhs. Then reserves. How much reserve did they add? Entire 80,000 can I record? Only 70%. Only 70%. Reserves. 80,000 into 70%, 56,000. So the total is 756. As holding company, I am getting only 756. But how much am I paying?
10 lakhs.
10 lakhs. So goodwill capital reserve. Goodwill. 244. To the extent of 2,44,000, I am paying extra. I am paying extra. So this 244 will be my goodwill. Everyone, is it clear?
Yes.
Yes. Now, so we have calculated cost of control and now they are asking minority interest every year. So I will start from the beginning. Minority interest on the date of acquisition. I'll start from there. And then we will see every year how the minority interest changes. Everyone. So minority interest at the date of acquisition, minority interest at the date of acquisition per share capital. See, 10 lakh, 70% is holding company, 30% minority. So 10 lakh into 30%, 3 lakhs. Then reserves, 80,000 into 30%, 24,000. So my total is 3,24,000 everyone. At the date of acquisition, my minority interest is 3,24,000. Can I continue?
Yes.
So, and when did we acquire? 1st April 20x1. So I'll write the date 1st April 20x1. Then reserves. In the 4 consecutive years, B Limited fared badly and suffered losses of 2.5 lakh, 4 lakh, 5 lakh, and 1,20,000. So this happened in which year? So 20x2, x3, x4, x5. Everyone. So now 31st March 20x2. At the end of first year, what was loss? Loss was 2,50,000 in that minority interest share.
30%.
30%.
75,000.
Minus 75,000. Why bhaiya minus 75? Why minus 75? It is loss, everyone. So bhaiya, my opening balance was this. This is loss for the year. Everyone. Yes. So now minority share as on 31st March 20x2 is 324 plus 2 lakh. So minus 75, 2 lakh 49,000. 2 lakh 49,000. Any doubts for anyone? The minority interest date of acquisition was this. And guys, yesterday problem, first problem, if you see, we took share capital and we took pre-acquisition, post-acquisition. Pre-acquisition was constant every time. Only post-acquisition profits are changing. So this is the post-acquisition profit. Now next, 31320x2 over. Now 31320x3. Uh, loss is 4 lakhs. So 4 lakh into 30% minus 1 lakh 20,000. So it is 1 lakh 29,000. 1 lakh 29,000. Everyone. Yes, now. So 20x4. 5 lakhs. Yes. 5 lakhs into 30%.
Minus 1 lakh 50.
Oh yeah, minus 21,000. Minus 21,000. Possible? No. Minority interest cannot be less than 0. So yeah. Now this 21,000 we cannot change. It will come like this only. It will come. Now one more line I need to add. Loss to be borne by holding. Loss to be borne by holding 21,000 and it will become 0. Where minority always safe, bhaiya. Minority always safe. What safe, guys? You are always dominated by others. You are not safe. You are not safe. You are that residual figure in the company. So, but okay, that's how things works. Everyone till here, is it clear? So minority interest can never be 0. Can I continue? Cannot be less than 0. And I'm highlighting this number. Why, you will know in some time. I'm highlighting this number. So 20x5 loss of 1,20,000 means the losses were being reduced. 1,20,000. 36,000. So here it will be earlier it was 0, now minus 36. How much loss holding company? 36,000. 36,000. This loss is also borne by holding company. Holding company. Everyone clear till here? Now there was a turnaround. What is turnaround, Bhaiya? What is turnaround? In SM, I'll explain. In SM, I'll explain. Turnaround means that business changed, that time changed, that Rashi changed, everything changed, and they started becoming profitable. So thereafter, they experienced turnaround and registered annual profit of 15,000. So 31st March. If 1 second. So 31st March 20x6. Now there's a profit. There's a profit of 50,000 into 30% everyone. 15,000. So on 31st March 20x6, it will be 15,000 everyone. But don't think holding will tell I have borne your loss. No, who will compensate? First to compensate that. First to compensate that, and then you enjoy the profits. Fair enough. Yes, because holding company has borne minority interest loss. So what 15,000, 15,000. So uh, absorbed by holding. Absorbed by holding company 15,000. And that share will become again 0. But loss absorbed by holding. Loss absorbed by holding. See, earlier it was 21,000, then 36,000 minus 15,000. 42,000. This I should have written here also. So 21 plus 36. How much?
57.
57,000. 57,000. Everyone, are you able to follow? Yes. Now 31,320x6 over. Then 20x7, it is 1 lakh profit. So 1 second, just a small correction. Here it should be, we'll start from 57,000 minus 50. So 31st March 20x7 profit
30%.
1 lakh into 30%, 30,000. Then can they enjoy? No, 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 no. So
50,000.
holding company will take this 30,000 and their share will again become zero. Their share will become zero.
42 minus 30.
So 42,000 minus
30,000.
30,000. How much? Is everyone able to follow this clearly? Now last year. Just a minute. 31st March 20x8 profit 1 lakh 50,000 into 30%,
45,000.
45,000. So it is opening balance is zero, 45,000. Now how much holding company? They cannot take beyond 12,000. They cannot take beyond 12,000. So minority share. So X8. Okay. So it is 33,000 and loss will go away. Will go away. Why? Because the entire loss what holding company has absorbed, they got it back. Entire loss what holding company has absorbed, they have got it back. Everyone, is it clear? Yes. So I'll repeat again for my satisfaction. On the date of acquisition, 30% was minority interest. We calculated share capital reserve 324. And first year they had loss. So from 324, we'll subtract the loss. Second year again loss. From that, we'll subtract the loss. Third year again loss. But that loss went beyond zero. That loss went beyond zero. So that will be borne by holding company. Next year, again loss. It will be borne by holding company. Then again, once they started bouncing back, once there is a turnaround, they have started earning profit. They have started earning profits. What they will do, they will give it back to the holding company to the extent absorbed by them. So to the extent, totally 57,000 was the loss absorbed by holding company. To the extent of 57,000 they will take. After that, they can enjoy. Everyone, is it clear?
Yes.
Yes, please copy quickly. Okay, so now let's move forward to the next illustration. Illustration number 5. Variety Limited holds 46% of paid up share capital of VR Limited. Is Variety Limited holding company? The shares were acquired at a market price of 17 per share. The balance shares of VR are held by a foreign collaborating company. A memorandum of understanding has been entered with the foreign company providing for the following. The shares held by the foreign company will be sold to Variety Limited. Variety Limited at present they are having 46% and foreign company 54%. That foreign company will sell the shares to Variety Limited. The price per share will be calculated by capitalizing the yield at 15% capitalization method. Yield for this purpose would mean 40% of the pre-tax profits for the last 3 years, which were 30, 40, and 65. Don't worry about this. I will take you through. The actual cost of the shares to the foreign company was 5,40,000 only. The profit that would accrue to them would be taxable at an average rate of 30%. The tax payable will be deducted from the proceeds and Variety Limited will pay it to the government. So out of the net consideration, 50% would be remitted to foreign company immediately and balance will be unsecured loan repayable after 2 years. The above agreement was approved by all the concerned for being given effect to on 1st April. The total assets of VR was 1 crore. It was decided to write down property, plant and equipment by 175. Current liability on the same date were 20 lakh. Paid up share capital of VR was 20 lakh divided into 2 lakh shares of 10 each. Find out goodwill or capital reserve to Variety Limited on acquiring wholly the shares of VR Limited. So a very beautiful question, everyone. There's nothing great here, only 46%, 17. Go through these points. Vani, can I? So they are asking us goodwill or capital reserve. Let's begin. Illustration 5. Calculation of goodwill slash capital reserve. Calculation of goodwill slash capital reserve. What are the two things we compare? Cost of investment and holding company share at the date of acquisition. Now, in this problem, think and tell cost of investment will be 1 or will be 2. Cost of investment will be 1 or will be 2. 2 because he already has 46%.
Yes.
And 54% is acquiring now. So there will be 2 cost of investment. He's investing. This name of the company, Variety Limited, is investing in VR not once but twice. So uh, present stake, present stake. In this 2 lakh shares, these guys they have 46%, and per share they have acquired at 17 rupees. Numbers are in lakhs or whole numbers? Just a minute. All the numbers are in lakhs, so I'll keep all the numbers in lakhs. Yes, everyone, come on. 15 lakhs,
64,000.
64,000, 15 lakhs, 64,000. This is the present stake, everyone.
Yes.
Next, amount paid to foreign company. Amount paid to foreign company. For that, we have to do a detailed working note. See here, the shares held by the foreign company will be sold to Variety. This part, they have made it very clear that foreign company will sell the shares to Variety. And price will be calculated by capitalizing the yield. So first we have to find yield. Working note 1, amount paid to foreign company. Amount paid to foreign company. Here, first we have to calculate yield. And for calculating yield, what they are telling, 40% of pre-tax profit of last 3 years. So last 3 years, average profit 30, 40, and 65. 30, 40, and 65 divided by 3 into 40%. Into 40%. Yield is 80 lakhs. Yield is 80. Oh, 18 lakhs. Okay. Yield. Everyone, yield, is it clear? Now they are telling you have to capitalize the yield. You have to capitalize the yield. So value of company. This is how valuation is done in Shark Tank. That's why they ask the profits. This is how valuation is being done. So we have calculated that average profit is 18 lakh and like 40%. 40% is 18 lakh. Now valuation of that company 18 lakh divided by 15%. 18 lakh. Okay. 18 lakh into 15%. 120 lakhs. 120 lakhs. Everyone. So this is the value of company. This is the value of company. And number of shares 2 lakhs. So price per share 120 lakhs divided by 2 lakhs, which is equal to 60 per share. Everyone till here, is it clear? Till here, is it clear? Now they are telling 60 lakh is the value of company. 60 lakh is the value of company. Sorry, 120 lakh. 120 lakh is the value of company. Now when these guys are acquiring 46%, so they already have. So in that 2 lakhs, so 1 second, amount paid to foreign company, out of 2 lakh shares, 54% into 60.
64.8.
Bhaiya, why so much time waste? Bhaiya, you got value of company into 54. You can do and check. You'll get the same answer. You'll get the same answers. You got value of company 120 lakh, 54%, 64.80. 60, 64.80. 64.80. Now. Will the entire amount be paid to them? No. But all this we can discuss later. Amount paid to foreign company 64.8 lakh. So total cost 80.44. Total cost 80.44. Any doubts for anyone? This already they were having. This they have acquired now. We have 46% they took for 15.64 and for remaining 54, 64. For extra 8%, they gave 4 times the amount. Happens. Might be this shares they would have acquired long back. And when they acquired, price was 70, now it is 60. That could also be the reason. Now, on the date of acquisition, have they given a share capital? Yes. But then Why have they given us PPE, total asset, blah, 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 blah? Because they did not give us reserve. They did not give us reserve. So just like how we did in the previous problem, we have to calculate shareholders fund. Working note to shareholders fund. So here total asset is 1 crore. We are writing the numbers in lakhs, I suppose. Huh. Then any other liabilities?
Current liability.
It was decided to write down PP by 1,75,000 less 1.75. Current liabilities on the same date were 20 lakhs. So less current liability minus 20. So can I say it is 78.25? What? That is unsecured loan. That is a different story. Now 78.25, that is shareholders fund. That is shareholders fund. Now what should I write here? Whatever you guys tell, I'll write. Share capital. What is the amount which I should write? 20 lakhs. Now it is 100%. So entire share capital belongs to them. Entire share capital belongs to them. So now 78.25 is what they are getting, but they are paying 80.44. Goodwill or capital reserve? Goodwill. 2.19. 2.19 goodwill. Is everyone clear on this?
Yes.
Goodwill. Is everyone clear? So yeah, we got the goodwill, problem over. Problem over. So see how different ways they can ask the problem. It's the same calculation. We are playing around the same numbers. From first problem till illustration 5, goodwill or capital reserve, am I using the same to, am I comparing the same two numbers? Yes, but how do we calculate those two numbers are different in different problems. Now, भैया problem to over. But भैया last they said they spoke about tax, they spoke about 50%. So they have not given, but for extra information, just for extra information, discharge of purchase consideration. Discharge of purchase consideration. So purchase consideration is, will they pay entire 64.8? Definitely no. First they less tax. Subtract tax first. Subtract tax 64.8 and they have acquired for 5,40,000. So this foreign company they are selling for 64.8 lakhs, but they acquired for 5.4 lakh. The difference is called capital gains. You learn in DT. You learn in DT. The difference is called capital gain. On that capital gain, 30%.
17.82.
17.82. So net purchase consideration payable.
46.98.
So after minus subtracting the tax, they'll pay 46.98. And how will they pay? 50% immediately. 50% immediately. So cash 23.49 and unsecured loan. Unsecured loan 23.49. Everyone, they did not ask, but just because they have given so much extra information, they gave. So I am trying to highlight that this information is not affecting your goodwill. Tax, is it affecting goodwill? No. The secured loan or cash, is it affecting the goodwill? No. So and question says, the beauty, read the question. Profit would accrue to them would be taxable at 30% and will be deducted from the proceeds. When you are paying itself, you will deduct this 30% and pay. This company has to pay 64.8. They are telling subtract the tax, and then pay the balance amount. And in this balance amount, 50% cash, 50% loan. Everyone, is it clear?
Yes.
Yes? Come on, start copying. So now we will do one more problem before I give you a break. Next illustration, illustration number 6. A Limited acquired 60% shares of B Limited at 20 per share. Following is the extract of balance sheet of B Limited. Here everything is very clearly given, but except reserves. Reserves they have not given. On the same day, Limited declared dividend at 20% as agreed between both the companies. Is this pre-acquisition reserve or post-acquisition? Pre-acquisition. So property, plant and equipment were to be depreciated by 10%. Investment to be taken at market value of 60 lakh. Calculate goodwill or capital reserve to be recorded in consolidated financial statements. Can I begin? Again, simple and easy. It's more similar to this is third illustration. Very similar to the third illustration. So this is illustration number 6. One second. Illustration number 6. They have asked cost of control, goodwill or capital reserve is cost of control. Now cost of investment have they given?
Yes.
Yes, how much? 20 per share, 20 per share, and they've taken 60%. So 10 lakh shares, 10 lakh shares into 60% into 20, 120 lakhs. Here I have to write the full number. 1 crore 20 lakhs. Now, dividend. Is there any pre-acquisition dividend? Yes. Dividend declared at 20%. 20%. So, for dividend, 1 crore was the share capital into 20 percentage into holding company share was 60%. Everyone, are you able to follow? 12 lakhs. So, this dividend working notice not required. My net cost is 1 crore 8 lakhs. 1 crore 8 lakhs. Now holding company share at the date of acquisition. So first I have to calculate shareholders fund. Your PP were depreciated at 10%. It is 70 lakh in the balance sheet. Depreciate 10%. 63 lakhs. Then investments. Market value of 60 lakhs. So PP I have taken investment. Current asset. Anyone? Current asset 68 lakhs. Then loans and advances. Now, bhaiya, this loans and advances, is this an asset or is this liability? Because all the liabilities we have completed on top. These are some logical conclusions we have to draw. Loans and advances, it is 22 lakhs. 22 lakhs. So all the assets are over. Total is 2 crore 13 lakhs. Then any liabilities? Yes. 10% debentures, 10 lakh. And trade payables, 55 lakh. So shareholders fund will be 1 crore 48 lakhs. 1 crore 48 lakhs. And now entire amount I should write here 60%. 60%.
88 lakh, 80,000.
88 lakh
80,000.
80,000. 88 lakh 80,000. I have paid extra or I have paid less? Extra. Then it will be goodwill. How much goodwill?
19 lakhs 20,000.
19 lakhs 20,000. Nothing new in the problem. Nothing new in the problem. Usual common adjustment. Three more problem will complete the base of consolidation. I think today we can do consolidation itself. Easily. फर्स्ट राइट क्या लीकेज है हर एक घंटे में जाना है You can complete first and then go for break. Complete first.